reactions. We'll get to Rakshit Ranjan, portfolio manager at Marcellus, who's joining in this morning. Rakshit, good morning. Thank you for joining in. You know, we're just talking about this fact, right, that you are in a market where good earnings are getting rewarded, but the bad earnings are getting hammered. And how? You can see that being a case in point with India Mart, or even with negative news flow related stocks like PNC Infratech. But what I wanted to ask you is, have we come to a point where the margin for error for any company is absolutely zero, right? For any blip gets a India Mart kind of a reaction.
Yes, I think that's fair to say, because how valuations had traded all over the last, say, couple of years, wherever earnings were not sustainably backing those share price up moves. The disappointment in earnings, which is across the board actually, this quarter, most companies, as you're rightly picking up, are reporting weakness in earnings. And this is not a one-quarter blip. I think I don't think for some of these companies, the kind of earnings that they reported in a temporary manner in the last 1 or 2 years was sustainable. So negative reaction should be expected for stocks where valuations are rich but earnings are not sustainable.
Amongst the stocks that you own, Rakshit, which are a part of your various portfolios, have you seen any big earnings disappointments there?
Yeah, not really. I mean, there was Tata Consumer over the weekend, which is part of our portfolio. That's the only one. Otherwise, for instance, the stocks in our portfolio in general, they've been outperforming on the share prices and earnings. So HDFC Bank is a large holding in our portfolio, and there are several others as well, where this September 30th quarter, we expect significant outperformance on both EPS growth as well as share prices.
Going with the Tata Consumer now, what is the approach that you're taking after this kind of a fall? Are you looking to add, or will you wait? Are you expecting in the near term some more time correction and therefore or price correction? What's the call now?
Well, so let me put it this way, that the business is actually under a significant capital allocation transformation for the last couple of years, and that's the reason why we've added it to the portfolio. We see that playing out well. What happened with their tea portfolio was more external environment related impact in the second quarter, which we don't see as being a meaningful drag on our view on the next, say, 3 to 5 years of earnings potential here. In general, we see the same pattern being followed by quality companies, which are likely to outperform the rest. So rather than doing more of the same, there's a bunch of quality companies which are adding newer growth drivers to their core. And that's where I think, whilst we expect the broader quality pack to outperform the rest of the market, but within the quality pack, we expect the capital allocators, particularly highly enterprising capital allocators, to outperform the rest of the quality universe as well. So that's the way we would approach companies like these.
What about City Gas Distributors, Rakshit? The news that came in on over Thursday and Friday, and the kind of reaction that you saw in stocks like IGL and MGL over on that session, do you think that was overdone when it comes to the news flow? Of course, the announcement itself is a negative, the lower allocation that is going to come to them. But the kind of reaction that you have seen, has the street already priced that in terms of that one session reaction, or do you think that there is still more in terms of earnings downgrades and further pressure to come for these companies?
Yeah, no, we've managed to stay away from this entire space for precisely the reason that the drivers and the growth drivers, the margin drivers for many companies in this space are not entirely in the control of the management team. There are too many external factors, and external factors bring uncertainty and significant change in the growth prospects of revenues and earnings for such companies, and hence we've managed to stay away.
Any other interesting trends where you may not have invested, but you are liking the early signs?
Yeah, no, we managed to stay away from some of these companies, and hence we've managed to stay away. Any other interesting trends where you may not have invested, but you are liking the early signs?
Any other interesting trends where you may not have invested, but you are liking the early signs?
Yeah, so I think different sectors, different trends. So, for instance, in the lending space, I think the gap between the boys and the men on both asset quality, particularly, and also a little bit on the net interest margins, I think is going to show up now. It has started. It will only intensify. This should be the reversal of the last 2-3 years where gross NPAs and net NPAs were only going down for everybody in the industry. So that's certainly a trend, a separation of boys from the men in the lending space we see going forward. I think in the consumption pack, there should be companies which do a lot of company-specific initiatives. So, for instance, Trent continues to be the largest allocation amongst the largest allocation in our CCP fund. Because whilst all the retailers, all the supermarkets in general will be reporting weak earnings given the weak broader consumption macro, but there'll be specific companies like this where they'll have too many company specific tailwinds to their fundamentals. So that should be the broad trend in consumption. There are some home building material companies in our portfolio where we see consensus upgrades coming through, given the way the consensus had actually factored in a lot of negativity related to competitive intensity and its impact on fundamentals. And hence we are sticking to some of those building material names as well. So those should be the broad patterns, more bottom-up company-specific stock picking. The broader macro is weak. Valuations in general for the stock market are expensive, and earnings in general for the stock market will be weak. So stock picking bottom-up as outliers is the way forward.
All right, Rakshit, thank you so much for sparing time and taking us through your views on the markets and on specific sectors and stocks as well. Rakshit Ranjan there of Marcellus. Time for a short break. Up next, we discuss everything commodities. Manisha Gupta joins us on the other side. Stay tuned.